All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Been an interesting market here today, and I've been watching it closer than I have, the rest of the, prior week or during the course of this week. Contrary to some opinions, I don't sit there and stare at the market all day. But, today I haven't taken my eye off it. And, some of that doing a little bit of day trading, but some of that is, really interested to see kind of where some of the money flows are and kind of how today shapes up in the market. And, we talked this morning that, bottom kind of came in a little bit in terms of we're probably not going to close below the high volume level, the high volume mark that we saw. In fact, let me see if I can pull it up on here. I don't have my Thinkorswim open. Let's see here. Let's go back and go one day. All right, so we had the hefty volume come in right around here, and chances of closing below that level very, very slim. But we talked, we might see it push below that level briefly, but we did snapped on back here. It's a day where I mentioned earlier today, I'm not so sure. A lot of people are going to want to be short into the weekend. But overall, it's a day where we continue to see there is no price stability within a 20-30 point range on the S&P. There is no price stability. If you're looking and saying, well, if it goes up another 10 points, well, that's, really bullish, or if it goes down 10 points, that's really bearish. You're changing your bullish bearish opinion every 5 minutes here. Market makers are not supporting prices because of, everything that's going on. And, so when orders come in to sell, things are going down a lot faster than normal, and vice versa. But, kind of been looking and saying, all right, are there any real kind of positives in this day, or is the market, environment about the same? If you look at just some of the metrics like the bullish percent index, it's the same old. It's the same thing that we've seen every single day for the last, for the entire month of October. It's lower. And it keeps on tracking lower, and no sign of really any turnaround here with it, and of any type of condition where you'd say, wow, okay, bulls are going to take some control. If we go and we look at something like the number of stocks, around the 7-day moving average, right, 112. So we're not exactly in that range that we have been, where you say, market's overdue for a strong bounce, right? We saw that here on Wednesday, where the market metrics, the number of stocks below sevens, suggested, hey, bears were a little too out in front of themselves. Chance of a strong bounce is high here overall. And, it's one of those where we don't see that same metric here today, right? We don't see that same element here today in terms of MarketVibe is so oversold that, it has to have a bounce. Now, the MarketVibe's a -8 right now, still bearish, still in bear control, but that's the same level it closed at yesterday. And this is one of the first days where we've seen the market go lower, and the MarketVibe hasn't eroded, but there's not exactly a lot of space here for it to erode. So bottom line, market conditions are pretty much the same as what they have been. Now this week we've done 2 trainings. Okay, that I think are very important in terms of navigating through some of this market, and if you're trading outside of a challenge environment. And I was asked earlier, Jeff, why don't you use these things for the challenge? Well, the challenge is a little bit of a different structure. It's a little different game, and it's one of those things where I'm not going to go day trade for the challenge itself most of the time, and for the challenge itself, getting in and doing something like what we talked about earlier today, that's a little too long term. right? So, the challenge is its own structure. I show you what I'm doing. I do it, execute it, and go. But, for those of you wanting some of the shorter term, some of the longer term through this market environment, we did 2 trainings this week. One on, day trading through this market environment, and that it applies to stocks and to the market. And we did one where, okay, how do you find and trade some of the stocks that, maybe due for a post correction rally. And, please feel free to go and check those out and to use those here going forward. And both of them are things that, I've used, I've tried, I've done, I've seen other people do, and, have been very successful with. For the challenge, I'm looking for some Katie signals, right? I want to see some Katie signals come in. And I have Adobe, right? And I guess before we look at Katie signals, let's take a look at Adobe. It's down 7 here. It almost went green for a moment. It's been down 11. It's kind of just been all over the place, here today, all within yesterday's range. And really, since I've gotten into the trade, it has kind of been all over the place, with the overall market. But my position of what I'm going to do with it, whether it closes down 7 or 11 or 13 or closes up 3 or 4 or 5, it's going to be the same. I'm going to hold this going into next week. Okay, I'm going to look to buy some more if we get down towards this 200-day moving average. And at this point, I may be willing to buy a little bit more if we break above the 254 level. But, we'll have to see how that plays on out. But chances are I'll go into the weekend here with the position and, run with it, into next week. Plenty of time on the option. That's not an issue. But you can just kind of see, we had the, here on the hourly, we had the breakdown below 242, wiped out a lot of the support levels. This morning gap down, went back down to this support level, has rallied off of it. But, it also rallied $10 in a matter of 2 hours. That's just 4% in 2 hours. So to see it pull back, pull back another, $5-6 here, it's not outside the context of what the volatility for the stock has been. And so going to run with it, if we do break above 256 here next week, that might be an interesting add spot. But definitely want to see, some of these lows hold on, for the position that I have. But I want to see some of these lows wiped out and exhausted through if I'm going to add more. To it. So I'm going to run with Adobe. Now, with that position and with the risk on that position, I'm not too apt to go and add more exposure in this environment where options are just, let's face it, they're really expensive. We still have a lot of earnings going. Now, less earnings. But I am willing to put that money into play for a Katie signal or a strong Katie signal. And, I do think we'll start to see some of them, starting to come into this market. We're starting to see 3-7 crossovers to the upside. General Motors. No, I'm not going to go trade General Motors for the challenge because as soon as I do, it's going to go down 3% the next day. If I do go, maybe I should just go buy a little bit of General Motors and tell everybody to go buy puts. But overall, GM, has that 3-7 crossover, but doesn't qualify as a Katie signal here just yet. American Airlines had earnings here this week, has a 3-7 crossover here on it. This one could finish as a Katie signal here today. It's really interesting in terms of the volume pattern, in terms of some of the exhaustion here, and even if you look fundamentally at some of these airlines, I mean, we talked about a while back here, at the end of last year and beginning of this year, why the airlines pulled back, because, they talked about, they basically talked about, we're going to sacrifice profits for market share. And if you go and look at some of the airline earnings this quarter, you don't hear that. You hear them talking about growing revenues. You hear them talking about growing profits. You hear them talking about working on capacity and cutting expenses, and some of those same bullish elements that you tend to see when they bounce pretty big. So American could be interesting, but we'll see if that ends up and qualifies here by the end of the day here today. Boeing has a 3-7 crossover on it here today. But it will not qualify as a Katie signal unless it were to rally about $10 from here. So the consolidation risk is just, it's very high on it. And then last but not least on the watch list is Chipotle. Now, Chipotle had earnings after the bell yesterday, and, we had the stock gapping up here today, and it's been fairly price stable considering the earnings, considering what Chipotle can do. But will potentially have a 3-7 crossover here today. I think it's it's 2 cents away in terms of the moving averages. So close enough. But this is one that could have a Katie signal on it by the end of the day here. Today. Most likely, I'll take a look at which ones kind of close out with a Katie signal. And instead of jumping into them today, I'll take a look and say, all right, let me find a good entry point next week, to jump on into one of these and go from there. So, that'll be most likely how I approach it, regardless of which one. We have Oracle, which when Oracle was up a little bit more, started to show some 3-7 action, but it isn't really holding on there. Borg Warner has a nice little 3-7 action on it, but is not on Katie's watch list here. You see some of the things like an AutoZone or an Advanced Auto Parts. They have 3-7 action potentially here today, but whoops, not Apple. Advanced Auto Parts, AAP, which has held up remarkably well in this market environment. They have some of that action if you're looking for some of that action out there. Comcast as well. So we're seeing a lot more of it starting to creep in. Starting to creep into the market, but not overwhelming, not to a degree where you say, wow, everything's off and ready and clear. Most of it does have some higher consolidation risk, but the Chipotle, Boeing, American Airlines, those three may be a little bit different as we go into the close of the market here today. If you look at how the market is sorted out today in the sectors, you'll see consumer discretionary led by Amazon on the bottom, right? They're on the bottom. The Amazon effect is there, and the Amazon effect is affecting technology here as well. But you look at the worst performers. It's healthcare, utilities, tech, right? The Amazon effect, but consumer staples. And you look at the best performers, financial, energy, industrial materials. Yeah, they're red. They're in the red. But the market has bought things up in a little bit more of a bullish pattern than what we have seen, most of this week. And very, very interesting, and very, I think kind of leans towards the argument of the market basing out here, but it's not strong enough to be able to say, market's bottom, let's go, and, all aboard, and, buy everything and anything right here, and you'll be good. Well, we get to that point, just turn on the TV. You got a lot of people calling bottoms. You have a lot of people talking about it going lower. That's kind of the aspect that we will see and is normal, in this time period. And, the bottom pickers, I'm sure you'll hear from a buddy this weekend that, heard from somebody that, had called the bottom back in 2009 and they're calling for a bottom now, right? That's going to be common. That's going to be pervasive out there. And, eventually bottom picker will be correct. But most bottom pickers pick the bottom about 10 times and then eventually are correct. And you simply hear about the time where they are correct. But overall market conditions, they're the same. They're the same as they've been. I do believe that we are in a basing out process, and but that basing out process with the way this market has moved, could be significant, still could see 100 points to the upside and 100 points, maybe not 100 points, 80 points to the downside as far as the range where it bases out in. And that's not uncommon. We didn't see a huge basing range right back here, but that basing range was well over 100 points, okay, on the S&P. I think this is a lot stronger of a correction than what we saw back here. I know magnitude-wise it's similar in many ways, but I think in terms of the fear element, in terms of what's going on, right back here, it was pretty quick, it was pretty easy to ascertain what happened. The VIX products melted down, right? The XIV, went bye-bye, and the VIX products, really melted down, and that threw some mechanical chaos into the market. This hasn't been mechanical. This hasn't been a mechanical chaos. This is a questioning of future economics and future earnings, and maybe one of the first times that the market has really questioned those things in a major way in the last 5, 6, 7 years. And I know you'll say, well, we've had sell-offs, worried about that. But to sell off to this degree for those things, first time in a long time. So it is one of those where I ultimately believe we will snap back, but it is going to, it's still going to, have some time element and still going to have some, some volatility associated to it. I do think that one of the things you can come and do is take a look at some of the seasonality. Take a look at some of the stocks that tend to perform really well in November or December. And I do think some of this seasonality is going to start to show up, especially with how bad October has been. You take a look even at something like a Micron, some of these stocks that are incredibly oversold. And October for Micron, ugly month. Look at November, December, January, February, March. It's heading into its strongest period. And there's a lot of things that are getting ready to head into their strongest seasonality period. And we'll talk about those next week. We'll take a look and dissect some of these as we get into November. But I do think some of these need to start being paid attention to. And, you get some of these like a Micron that has, a pretty good track record for the next 4 months, 5 months. And you start to see some buying come into it. I do think, they are oversold to a degree where they've priced in much of the bearish story, where we could see that bullish story really emerge and see something, like a 30% move higher in a name like a Micron. And I'm not saying go buy it right now or anything like that. But, where we're starting to get to the point where we will see some of those things, take place and some of those things happen here in the market. Okay. Alrighty. Well, thanks for hopping on. Any questions, please let me know. And have yourselves a fantastic weekend, and we'll talk to you again on Monday. Take care.